Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 14th, 2021. I want to talk about stock and option trading ideas for the week of June 14, 2021. So with that, we'll look at John Carter's Ttm Squeeze Indicator, and looking at that, let's see what stocks are good to buy, and also, can we buy some call or call spread to take advantage of TTM squeeze. TTM squeeze is a great indicator that tells you when a stock is going to break out of its current trading range. So with that, let's jump in and get started. So here are the list of stocks that are forming a TTM squeeze. I will go through this in a little more detail so that way you know the methodology. So the way I selected these stocks is really I got a stock symbol here and name of the stocks and current price of the stock, $11 in case of Velodyne, and market cap, sales, very important for a company to have a good sales, and sales acceleration, good to know what's the sales growth. Gross margin, very important, and also how much institutions are buying, big fund managers and institutions, are they buying into this stock. Then short float, it tells you if the company has got a lot of short positions open, this can really cause a short squeeze, as we all know. Then price to sales, that will tell you from a valuation perspective, is the stock highly valued, or is it a less valuation. So any valuation at a higher valuation, you got to be a little careful and trade carefully. Then we got IV percentile. For the option buyers or option sellers, you got to look at IV percentile very carefully. For example, a IV percentile below 50, that tells you, it's okay to buy options at this time. But if the IV percentile is above 50, then probably you should be a seller of options and get some premium that way. RSI tells you if the stock is overheated at this time. For example, RSI above 50, that means stock is in a over bought territory. You got to wait till RSI drops below 50 to buy. As an example, here we got BEKE Holdings, RSI 48, and as you scan through this, we got a couple more here, Uber, and even one here, CSX. Those are all the stocks which are oversold at this time. You could safely buy some. And then we got volume. This volume is in millions, so 3 uh, 32 means 3.2 million shares traded. Very important to have share volume to indicate the liquidity. You can go in and go out easily. Then you got John Carter's TTM squeeze. What I've done is I've listed either a 1 day squeeze in a 1 day chart, in a 3 day chart do we have a squeeze, in a 1 week do we have a squeeze, and 1 month do we have a squeeze. If there's a monthly squeeze like you see here, that will last for a couple months, and if there is a 3 day squeeze, it will last in a multiple of 3 days. If there's a daily squeeze, it will last for a couple days or weeks at a time. So with that, it's these are the 1 day, 3 day, 1 week, 1 month. These are the John Carter's TTM squeeze indicator. And then we got earnings date. Very important to know when is the earnings coming up. In some cases, in case of BK, earnings already happened. Then we got performance, 1 month, 3 month, 1 year, and how much it's off of 52-week high. That tells you does the stock have more room to run. With that, let's jump in and get started. To make it a little quicker, I also indicated a couple of stocks here in green background here. As an example, ATUS, DAL, Delta Airlines, which is NXPI. We will look at a couple of those and get started. First, let's go to ATUS here, Altice. Let me go back to Thinkorswim from TD Ameritrade. Let's put ATUS. So as you can see here, I'll jump into first I'll jump into a smaller chart here. If you look at ATUS Altice, from an on the balance volume perspective, stock is kind of going nicely. On the balance volume is up. That means people are buying into the stock. RSI itself is pretty nice. It's trying to gain some traction here. And DMI is telling me there is a bullish crossover in works. So this blue line is trying to cross over the red line. That's a bullish crossover. And as you look at the implied volatility is low, 4.7. If you're an option buyer, you could buy options of this stock without paying too much premium. And from a check-in money perspective, smart money, I think it's kind of flat to down at this time. Smart money is really thinking to buy or not. So with that, let's also go into John Carter's TTM squeeze indicator here. As you can see here, ATUS, um, we we have a squeeze, in a weekly chart, as you can see here. And the moment you see red dots here, that indicates there is a squeeze about to form. And the moment you see a green line after the couple red lines, that tells you squeeze has triggered. Once you see a green line, then you look at the TTM wave, which is a wave, and see how is the A wave. Are the bars above zero? If the bars are above zero, that tells you it's going to fire on the bullish side. If the bars are below zero, then it tells you it's a little bit bearish at this point. But you can ignore TTM wave, the short-term A wave, and you could focus on the longer-term C wave. If the longer-term C wave, if the bars are above zero, that tells you it's going to fire on the bullish side. So in this case, Altice, we got a longer-term C wave above zero, and also you can see the waves are light blue. That tells you it's going to fire. It's a bullish indication. So with that, you can safely buy either Altice stock itself or Altice call option or a call spread. And when you're buying a call, use more time. Don't buy just 1 month out. Give it at least 90 plus days. And as you scan through this, longer term also, you can see longer term A wave, it's also above zero. That tells you in the weekly basis and even longer term, C wave is above zero. That's a bullish indication. So with that, let's jump into the option chain here. Altice is a $34 stock. You could buy Altice outright at $34. You can just go here, say ask, click on ask and buy stock outright. But if you want to trade option, I would go in this scenario even 95 or 186, either one is good. If you go to 95 here, you could buy Delta 70 call option here, 72 here. You can pay $4.20 and you could buy this outright. So you have infinite profit potential. As you can see here, if the stock goes above 36.20, you will make money, which is above like $2 or so above current price. But if you don't want to pay so much money, or if you're worried stock may not go that high, you could even do a call spread. So to do call spread, stock being at 34, you could buy 30, 40 call spread. So you could do something like this. 30, you're buying 30 and you're selling 40. So if you do that, you're paying $5.15 to do this. And if the stock goes about 35.15, you will make money. Your max loss is 515. And this is another way to play. But Altice being a low dollar stock, you could really buy the call option Delta 70 like we talked about here. Delta 70 call option by paying around $4.20 or so. I think that's maybe a better play here. So with that, let's jump into next one here. So let's look at Delta Airlines, ticker symbol DAL. So with that, let's go into Thinkorswim platform. So Delta Airlines, let's go to chart here. So as you can see here, stock is doing very nicely. It's trying to go above the 9, 25, 50-day moving average. As we see here, on the balance volume is pretty steady, indicating people are buying into the stock. RSI is trying to stabilize a little bit at this time. This stock is also, as you can see here, the blue line is above red line. At this point, it's bullish, but it's not a prominent bull because the distance between the red line and the blue line is pretty narrow. So it's just turned bullish, as you can see here. And from a volatility perspective, volatility is very low. 0 percentile implied volatility rank. And from a check-in money perspective, I think people are trying to buy into the stock. It's trying to go up versus flat to up. So with that, it's a little okay indicator, not great. I would love to see this going up, but it's okay, not bad. So with that, let's jump in and look at TTM squeeze chart from John Carter's here. As you can see here, as you scan through this, we got a squeeze forming in a 3-day chart. As you can see here, the lines, the A wave is trying to, as you can see, oscillator is trying to reduce in size here. Bars are reducing, and also the yellow bar indicates a little bit bullish pattern here. I would love to see all these lines above zero, but this is shorter term A wave. You can ignore the bars for most part. Focus on longer term C wave. If you look at longer term C wave, bars are above zero. It's not perfect because I would love to see all the bars to be light blue, but there are like 2 bars which are dark blue, which indicates there is some bearishness in the stock at this time. But as you scan through this and go into longer term chart here, a weekly chart, 5-year weekly, bars are above zero in the A wave. And if you look at the monthly chart, even bars are above zero. They are also light dark blue, indicating there is some bearishness here. So with this, this is not a perfect setup. To take this, you got to be a little bit contrarian. So you could buy a little bit, either the stock or the option, because there is, at least we saw on the balance volume showing pretty steady, and there is a very good indication that airlines might open up with the COVID restrictions lifting. People are taking more and more shots. With that, let's jump into option chain here. Delta Airlines, $46 stock. If you want to buy options, you could go either 95 or 186 days out. So if you go 95 days here, stock being at 46, you could buy Delta 70 call outright. So you could go here, buy Delta 71, pay $5.50. If I confirm and send, you have infinite profit potential as stock goes up. Your max loss is 550, the price you paid for the option, and your break-even point is 48.50, $2 above the current stock price. So if you don't want to play this, you could also do a spread here. To do that, stock is at 46. You could do 40-50 spread here. So if you do that, so buy vertical 40-50. There you go. So you're paying $5.54, and your break-even point is a little bit lower here, below the current stock price. So this is another way to play, a little more conservative. You're not paying too much money. At the same time, your break-even point is lower than the current stock price. You could do something like this safely. Only thing is your profit is capped here. If you bought the stock, the single option Delta 70, even though you paid a little higher price for it, in this scenario, $5.50, your profit potential was infinite. Here with this spread here, spread itself is $10. You are paying 554, remaining 446 is your profit potential. You're kind of doubling your money, a little bit less than doubling your money, but it's a little safer play because the break-even point is lower. So with that, let's look at next idea here. We got a couple more here. We could look at NXPI, NXP semiconductors. Everybody knows, semiconductors in shortage. NXP plays into the automotive semiconductor, which is in a huge shortage at this time. Let's go back to NXP. All right, so if you go to the chart here, NXP, as you can see here, nice looking chart. Stock is trying to make a comeback, as you can see here. Nice two bullish candles here. On the balance, volume is trying to go up, as you can see here, and that's a positive indication. And RSI is trying to stabilize here. That's also good. And DMI perspective, the blue line is trying to see what to do. The distance between blue and red is low, and in the future I could see this blue line crossing over red. That's also a possibility. As you look at the volatility is low, 0 percentile. As an option buyer, you're not losing too much money into theta decay at this point. And check-in money flow is telling a different story. It's telling you, hey, be careful, because as you can see here, smart money is not flowing into the stock. Instead, it's flowing out of the stock. So with that, let's jump in into option chain here and see what we can do. Before we go to option chain, let's go to Ttm Squeeze Indicator by John Carter. So if you look at here, Ttm Squeeze Indicator, we got a squeeze forming in a 3-day chart. Um, this is really 2-year 3-day chart. So we got a squeeze forming here, couple red dots. If you look at the A wave here, so A wave, it's below, the red lines are below zero line, so that's a little bit bearish indication. You can ignore the shorter term wave here, go to the longer term C wave. So you can clearly see the lines are above zero, and it's light blue indicating bullish. And as you scan through here, there is also a squeeze forming in a weekly chart. This is weekly 5-year chart, and you can ignore the A wave for most part. But as you can see here, A wave is also becoming shorter. I love to see this A wave also above zero, but right now it's below zero. But the longer term C wave, which is more important, the bars are above zero, and also it's a light blue indicating there is a bullishness here. And as you scan through to the monthly chart here, 10-year monthly, you can see all the bars above zero, both in the shorter term C wave and the longer term A wave. So with that, I would buy this NXP stock itself, or you could even buy call option, because it's a higher price stock. So with that, let's go into option chain here. NXP Semi, looks like Kathy Wood is also buying this, as you can see here. Um, so let's go in here, and I would go 123 days out, and I would look at, if it's, because it's 201 right now, I would buy 200, 210, or maybe conservative plays 195, 210. So let's go to 195, 210 here. There you go. You're paying $7.18 for this spread here. If I confirm and send, it's, as you can see here, it's a $15 spread here. You're paying $7.18. Remaining portion of the $15 spread is your profit potential, which is 782. You're paying 718 to make 782. So it's a doubling your money. You're more than doubling your money here. Your break-even point is just above current stock price, which is 202.18. This is a one way to play. But if you have a little bit bigger portfolio, you could also buy Delta 70 call outright. So you could go here, buy a Delta 70, pay $24, and confirm and send. So your break-even point is 209, which is maybe $8 above current stock price. Profit potential is infinite. This is the other way to play. This is not very conservative. Buying a spread like you did, like we saw earlier, is more conservative. So and you could also buy stock outright. Stock is it's a squeeze indication, so it might go up. You could buy stock outright. Buying stock outright is always another way to play. With that, let's go back here. We could see one more and go from there. So I will probably look at GOGO here, last one. GOGO is $11 stock. It's 33% off of 52-week high. So go here, GOGO. So if you go to GOGO and go to chart here, so stock has fallen off last couple days, last 3 days, as you can see here. Pretty steep drop here. They're below their 9-day, 25-day, 50-day moving average at this point. Chart is ugly right now, but on the balance volume is telling even now folks are buying into the stock. That's why there are more buyers than sellers. That's why this line is pretty steady here. And if you look at the RSI has dropped. It's pretty low, 41 at this time. And red line crossed above blue line, which is a bearish indication. And implied wall is low. IV rank is 6.3, which is okay to buy call options or call. And check-in money flow is indicating money is flowing out. So in summary, chart is ugly. So if you're really looking at a chart and buying, unless you're a contrarian, you'd shy away from this stock. Let's also go to TTM squeeze from John Carter. As you can see here, there's a squeeze forming in a monthly chart, and the yellow bar is becoming shorter and shorter. So which is a good indication. And also if you look at the shorter term A wave, the line is above zero. That's a bullish indication. And if you look at the longer term C wave, the line is above zero and it's also light blue. That's also a bullish indication. So as we scan through into a monthly chart here, as you can see here, lines in the A wave are above zero. It's a dark blue. I would love to see this to be light blue, but nonetheless, I would take this. It's above zero. And if you scan through 3-day chart, you can see lines above zero in the A wave. If you look at the shorter term, 1 day, 1 year, you can see the longer term wave above zero. So with this, there is a good indication this can fire on the longer side. So let's go to option chain here for GOGO. I would go 158 days out. Stock being at $11.59, you could buy stock outright here. That's always a good idea. But if you don't want to buy stock outright, you could buy option delta 70 or so. So if you go here, delta 71 here, you could pay $3.10, buy this outright. And stock has to go about $13 for you to make money or break even. Your profit potential is infinite. So this is one way to play. And other way to play is really you could do a spread here. Stock being at $11, you could buy maybe around $5 wide spread or $10 wide spread. So what you can do is really stock being at 11, you could do probably 9 and 14 spread or 9 and 15 spread. So with that, let's go here 9, 15. There you go. You're paying $2.25 for this spread. It's a $6 wide spread. So you can double your money. So with that, let's go here. You're paying $2.25 to make $3.75. So if the stock goes above $11.25, which is below current stock price, you will break even. So this is a more conservative play here. You could do something like this also. Stock being low price, you could buy stock outright also. So with that, let's go back here. So this is the full list. You could look through this just like we did earlier. There are some great plays here. Try to look at how much stock is off of 52-week high, and factor that also into your consideration. As usual, we want IV percentile to be low and we want RSI to be low because we want the stock to go higher. That's why we want to look at RSI, which is a little bit lower. So with that, thank you very much. Happy investing and trading. Please subscribe.